Welcome, folks. And we're going to talk about Aussie dollar and New Zealand dollar. Now, one guy in the group has asked my thoughts regarding these two pairs, and I did them a few weeks ago when I actually mentioned that we should see these two pairs rallying to the upside due to the fact that we've got so much money flowing into gold, and these two nations, Australia and New Zealand, they're quite export a large number of the precious metal. Now, with that said, if you've been following the markets of late, and since this geopolitical tensions, the war in Ukraine started, Australian dollar and New Zealand dollar were actually some of the strongest currencies out there at a time when we were expecting them to be what? To be weak. Now, this is geopolitical tensions, guys. Anything can happen into the market, and it's up to you as a trader to understand how to trade those currency pairs. So by that notion, there was no need for you to be hunting for what? For shorting opportunities on Aussie dollar and New Zealand dollar for the past 3 weeks. The past 3 weeks, there was no need for you to hunt for shorts. In spite of Euro USD trading to the downside, Pound USD also trading to the downside on a higher time frame. You can see the current month we traded as far as almost 1.29 on Pound USD, but we haven't seen Aussie dollar and New Zealand dollar creating a new low, which was supposed to be the case. Now, as we look ahead onto these pairs and how you should approach them when you're trading these pairs, these are my thoughts. Now remember, this is my own personal analysis, and it does not constitute financial advice. So we're going to look at Aussie dollar to begin with, and I'm going to go to investing.com, right? On investing.com, if we come to the central bank's rates, now remember, interest rates are the number one movers of markets. They're the most influential aspect of the market that you have to understand. And we can clearly see that RBA is set at 0.1% and New Zealand is set at 1%. The Federal Reserve is set at 0.5%. So generally, we should be looking to sell Aussie dollar lower rate against a higher rate country, and then New Zealand dollar, it's a higher rate against a lower rate country. So it's vice versa in terms of interest rates pairing, but we need to factor in the war. So with that, I'm gonna go back to homepage for investing.com. I'm going to look at the calendar and see if I have anything interesting this week regarding those two pairs, right? We already have the trade balance on Sunday for New Zealand dollar. And then we also had RBA governor. He was speaking, that is early Tuesday morning. And then we also had what else regarding those two pairs? Nothing really much, except there's quite a few USD fundamentals on the calendar. There's quite a few USD fundamentals on the calendar for the dollar. Now, with the dollar having those fundamentals, by default, you should know how to react. Once a fundamental comes out, positive news for the dollar, then you expect Aussie dollar against New Zealand dollar, Aussie dollar and New Zealand dollar to trade lower. That's on positive news for the dollar. And then negative news for the dollar, then we expect these two pairs to rally to the upside. So tomorrow we've got Powell. Powell is on the calendar tomorrow. That's something to take note of. We've got Powell on the calendar. That's the 23rd of March, right around lunchtime. Then we also have new home sales, crude oil. So expect these fundamentals to what? To have an effect or have a catalyst reaction on these two currency pairs. Now, I don't want to waste much of your time, guys, because by now you should know how to do your analysis, what to look out for, and how to define your bias. We have already taken care of half of the job. As long as this conflict keeps going and money flows into gold, expect Aussie dollar and New Zealand dollar to rally to the upside. Now, looking at the 9 to 18 month profile, the 9 to 18 month profile for New Zealand dollar right here up until this bullish order block. Now you can see this bullish order block on Aussie dollar. That's the one that's in control of the market. This bullish dollar is in control of the market. Price came to this monthly bullish order block and found support, and it is expanded to the upside after 1, 2, 3 months of consolidation. We've seen an expansion now in March. So February, January, and December, it was mere consolidation for Aussie dollar on a monthly chart. So now we have an expansion. And this expansion here, where's the draw on liquidity? You see, these are the things that you have to understand and see when you're doing your analysis. The draw on liquidity is right here, and this monthly fair value gap right here. That's the draw on liquidity. IPDA is looking to balance the price action. IPDA is looking to balance this price action here, this imbalance, this market inefficiency has to be rebalanced. So we've got our fair value gap right here. So this fair value gap is going to be the catalyst for the draw on liquidity. So that's the high and that is the low. We've got a fair value gap. Now remember, your monthly analysis is crucial to your understanding of where price is likely to trade to. As you can see right now, there is momentum, right? There's an expansion happening from this monthly bullish order block right here. See, price is expanding to the upside, right? After finding what? Support inside this discount area in the form of a bullish order block. Now, as price rallies to the upside, you need to be in a position to highlight the targets. Where is price likely to trade to? So in my own opinion, I'm expecting price to trade right into this fair value gap. And then once that happens, then I'll be anticipating a drop to the downside. Now, what could be the catalyst for that? Probably there's going to be an escalation between Russia and Ukraine, and that escalation is going to result in money flowing into gold, and we see the expansion going on into that fair value gap. And then probably sometime 2 months, 3 months down the lane, maybe there's going to be a truce or a ceasefire or something. Then we are bound to see this pair trading to the downside. Same applies with New Zealand dollar. So looking on the monthly chart, right? So we're expecting the draw on liquidity to be somewhere around this price point here, 0.7597. That's the draw on liquidity on the monthly chart. We've got these two highs here, right? So this is March February, January, December, November, and October. Relatively two equal highs, right? Relatively two equal highs. Some right around 0.7555. 0.7555. That's your draw on liquidity. You'll be expecting price to trade above 0.7555 because there is a liquidity pull off buy stops above that price. And once price reaches 0.7555, nothing is going to stop price to reaching out for the fair value gap for a drop to the downside. Now we're going to go on to the next lower time frame, which is now the weekly. Now on the weekly, you can clearly see this old high here, 0.7555. That is the draw on liquidity. Expect price to reach out for that. Now once it does that, right, you can see we've got this weekly bearish order block right here. Now once price trades above 0.7484, once price trades above 0.784, so you can clearly see the bias on Aussie dollar right now is bullish. Market is seeking buy side liquidity, right? Market is seeking buy side liquidity. So we've got a fair value gap right there. That's our weekly fair value gap now, the gray shaded area. You can see how it's inside that monthly fair value gap, right? So once price reaches out for this bullish order block, for us to be guaranteed resistance around this premium array, we need what? We need positive news for the dollar. You see, positive news for the dollar, then price is likely to find resistance around 0.7484. Now I'm going to switch back quickly to the calendar. What news regarding the dollar do we have from tomorrow? We've got Powell, right? We've got Powell speaking at 2:30. We've got new home sales. See, we've got crude oil inventories. Positive outlook on these fundamentals. Any signs that Powell is sounding hawkish on the dollar, then expect this weekly premium array in the form of a bearish order block to provide resistance. Now, the opposite applies. If we do get negative fundamentals, then this bearish order block here is not going to stand ground. Price will blast through and trade to the upside, targeting what? The liquidity above 0.7558. You see, this is how you have to look at price, folks. It's not about indicators or anything. I'm not saying indicators do not work, but try to analyze and look at price as it is, what it's telling you. So already we've got monthly bullish, weekly bullish. Now I'm going to go on to the daily time frame. But before I do that, I need to highlight this down close candle here. Right. That's our original demand level, right? Crucial for your shorting opportunity as a target, right? Any shorting opportunity, then expect price to trade inside this bullish order block, which is coming in the form of an original demand level. You can already see we have filled this fair value gap on the weekly time frame, and momentum is building a steam to the upside. So we've got strong momentum to the upside. I'm going to go on to the daily. Now on the daily, you can clearly see this is our daily time frame, and we have filled in this fair value gap here on daily. Now you can see inside the fair value gap, inside the monthly, not the monthly, this last up close candle here. You can see there's like 1, 2, 3 bullish candle. 1, 2, 3, 4 bullish candle. They make up this weekly bearish order block. Now, this candle here, our last up close candle on the daily time frame, right? I'm gonna put a different color shade so that you can clearly see the difference. So that's our daily bearish order block, and the gray shaded area is our weekly bearish order block. So yes, the bias is bullish, but with power on the calendar, expect these two premium areas to provide what? Resistance. Especially if Powell sounds hawkish in his statement that he's going to talk about tomorrow. If he sounds hawkish in that statement, then expect Aussie dollar to find resistance around 0.7484, or you're looking at 0.75 to 264, right? See those two price points. A positive news for the dollar. Expect price to find a resistance and drop to the downside. But the opposite applies. If it is negative, if Powell sounds more dovish, like what he did when on his press conference for FOMC last week, which we have seen this rally on Aussie dollar, Powell sounded more dovish. I'm sure you remember. You remember Raul sent a screenshot regarding these two daily bearish order block here, and I think it's this one here. I literally mentioned that this order block here, this bearish order block, with the 0.25 basis points that we saw from FOMC, right? And yet the market was anticipating a 0.5. That was bearish in a way. You see, the Federal Reserve did not fulfill what the market was anticipating. So that was bearish in a way. That's why we saw Aussie dollar rallying to the upside like this the whole of last week. And the same can be said for tomorrow. Don't anticipate these up close candles here to provide resistance if Powell sounds dovish. If he carries on supporting the statement he made during FOMC last week. So yes, it's ideal to be looking for longs on Aussie dollar, but keep an eye on the fundamentals. So right now my bias is to the upside, but only against negative news for the dollar. Anything positive coming out of the United States in terms of financial news, then I'll be looking to short Aussie dollar in this weekly or daily premium array. Any negative news for the dollar, then I'm expecting the draw on liquidity to be well above 0.7555. That is to say, that's my target for my long entries. Now I'm going to look at New Zealand dollar quickly. So this is the monthly for New Zealand dollar. So we can see the 9 to 18 month profile right here. Same applies. This bullish order block right here, you see, has provided what? Support, and price is expanding to the upside. Same applies. Remember, these are two correlated assets. Now, with New Zealand dollar rallying to the upside, where is price targeting, right? These relatively two equal highs right here, relatively two equal highs right around 0.7215. And if you look at 0.7215, that is this last up candle's mean threshold. See, this is the last up close candle's mean threshold. So expecting New Zealand dollar to trade to the upside in the coming months, of course, with supporting factors. Number one, the conflict. If it carries on, nothing is going to stop New Zealand dollar to rally to the upside, right? If the conflict between Russia and Ukraine carries on, nothing is going to stop this pair to rally to the upside. And one other interesting aspect on New Zealand dollar, when you're looking at market structure, don't forget, guys, your basic market structure reading. You see here with this short-term high, right? When price left this bullish order block, which is in control of price, price has actually created a new short-term high right here. The current month is high. It has broken above January high. That is crucial in terms of market structure. You see, in terms of market structure, that is crucial. That's a telltale sign for market that is looking to go to the upside, right? It has broken to the upside and now it's looking to trade higher. Now, these two equal highs inside this last up close candle and this expansion to the downside, 0.7214, that's the draw on liquidity on the monthly chart. So ideally, you need to be hunting for long trades. Now I'm going to go on to the weekly chart. Now you can see this is me now breaking down price action. Now on the weekly chart already, the moment I get there, you can see I've got this low here. I've got a liquidity void here, right? A liquidity void and this candle's high, January high. There was a fair value gap here, right? And that fair value gap is almost filled. See, with a fair value gap right there. See, and the price it is going to fill up this gap. You see, nothing is going to stop price filling up this gap here. Now that means to say bullish outlook, market looking to go to the upside. You can see there's quite a few pips on offer there. That's around 20, 25 pips on offer. And you can see all these down close candles here. That's a liquidity void. Market was only offering sell side liquidity. So price is looking to rebalance this market inefficiency. Now, remember those relatively two equal highs and our monthly bearish order block. So anticipating price to trade to the upside. Now, remember, it's not just a case of saying price is going to rally like that. We could see a drop back to this old high here, short-term high. Could see price trading back to this level here before another push to the upside. See, so we could see something like that, right? Or we could see a drop after price has filled up the gap, a drop, and then price trades to the upside. See, so that's how you have to approach it. You see, have scenarios that are going to be fulfilled by the fundamentals. You see, positive news for the dollar, then we cannot get a drop to that old high, right? Where it broke to the upside, where the change in market structure happened. You see, that's a clear telltale sign of a market which wants to go to the upside. Now, if we do get negative news for the dollar, then expect IPDA to fill up this liquidity void, this series of down close candles to be rebalanced inside here. Now, we also have this weekly bullish order block. That could be another further drop in price action before we start seeing evidence of support in price. See, before we start seeing evidence of support in price, but that's for another week. For now, we are looking to go long on Aussie dollar, that is to say on the lower time frames. So on the weekly chart right now, the draw on liquidity is on this bearish order block right here, right? So on the weekly chart, we are looking for price to be drawn to around 0.71500. You see, 0.71500. I've just rounded the number, guys, to an institutional price. So that is the draw on liquidity on the weekly chart. Now on the monthly chart, remember, it's on 0.72141. Now I'm going to go on to the daily. Already we've got monthly and weekly bullish. Now on the daily, you can see we've got price trading right here. You see, that's the fair value gap that is bound to be filled. Expecting price to fill up this gap here. So there's 30 or so pips on offer on New Zealand dollar. We've got 30 pips on offer before we anticipate price to face a bit of resistance inside this bearish order block on the daily time frame. So this is our bearish order block on the daily time frame, where we should anticipate price to face a bit of resistance, expecting a bit of bears to come back in to the market around this price point. Remember, price cannot just rally to the upside, guys, like crazy in a parabolic way. PDA has to rebalance. There has to be a structure that the market follows. So once price fills up this fair value gap here, you're going to have the high of Monday. You see, the high of Monday and probably maybe Wednesday's low. There's going to be a fair value gap there to the downside. If price does trade to 0.700, right, 0.70200, and we get positive news for the dollar, so this pair is will likely trade to the downside, right? Now if that happens, then Wednesday's low and Monday's high, there'll be a fair value gap there. Expect price to fill up that gap. But negative news for the dollar, then expect this imbalance here to be ultimately filled. You see, price will break through this daily bearish order block and rebalance this market inefficiency here. You see, that's a fair value gap. So I hope I have outlined in a much more proper sense of what you need to be looking out for if you are trading these two pairs here, Aussie dollar and New Zealand dollar. And the whole thing rests on you having a clear understanding of what's happening on the fundamental side. You see, we are in a very volatile period in the markets where things can change suddenly. You see, so be mindful of the fundamentals that are coming out, whether it's from the United States or from Europe, that are going to have an effect on the Ukraine-Russian war. So yeah, basically we're looking for long trades to fill up most of those market inefficiencies on both Aussie dollar and New Zealand dollar, and only on positive news for the dollar, then you should be hunting for shorting opportunities on the two pairs from the premium arrays that I have mentioned. So with that, guys, I wish you good luck and happy trading for the rest of the week. And just be careful, guys. Make sure you protect your equity. So if you're not in a mentorship group, you're probably gonna see this video. I'll probably make it public maybe Thursday or Friday. And if you want to join the mentorship, just send us a message to learn more on how you can look at the market in a different manner, how you can do your analysis without indicators or any of those retail jargon that is being taught out there. Not saying that it doesn't work, but it is not sustainable. That much we can agree on. So yeah, that concludes our weekly mentorship video. And take care of yourself, guys. And don't just trade without a clear understanding of what you're doing, because you get burned. That much I know. You get burned. So yeah, good luck, folks, and keep well. Thank you.